Well, to say that we have problems in the banking industry is an understatement. First Republic Bank becomes the next major American bank to fail under President Joe Biden as JP Morgan Chase takes over its assets. First Republic Bank collapsed last week. It's the third major bank failure in the past couple of months, past few weeks. So now JP Morgan Chase is going to step in and buy up the assets. In a statement, the United States National Banking Regulator, the Federal Deposit Insurance Corporation, otherwise known as the FDIC, announced on Monday morning that the San Francisco-based bank had indeed failed after First Republic customers withdrew around $100 billion of deposits over the past few days, and its stock price collapsed. In a deal orchestrated by the government, JP Morgan will assume all of the deposits and substantially all of the assets of First Republic Bank, including the 84 offices previously operated by First Republic across 8 states, which will open as branches of JP Morgan Chase on Monday. According to the FDIC, First Republic Bank had an estimated $229.1 billion in total assets as of April the 13th, as well as $103.9 billion in total deposits, meaning that it was the second largest bank failure in American history. And folks, it's going to get worse. The banking regulators said that all deposits will continue to be insured by the FDIC and that customers do not need to make any changes to retain their deposit insurance. The collapse of First Republic Bank is predicted to cost the deposit insurance fund about $13 billion as it struck a loss-sharing deal with JP Morgan Chase. Chief Executive Jamie Dimon of JP Morgan Chase said on Monday that the government had, quote-unquote, invited the major bank, among others, to step up, and we did. Dimon claimed that the takeover would modestly benefit JP Morgan Chase and that the assets acquired would be complementary to its existing holdings. The collapse of the San Francisco-based bank will likely become a political issue, with the Republicans likely to brand the failure of the bank as another casualty of the poor economy of President Joe Biden, whose disastrous economic and foreign policies resulted in rampant Bidenflation. Yes, that's right. When the Federal Reserve stepped in to raise rates to dampen inflation, the value of large portfolios of bonds at some banks were hit hard as they were bought up by the banks at times of lower interest rates. The inflationary spiral and ensuing rate hikes have impacted many banks negatively, with similar issues befalling the now failed Silicon Valley Bank, SVB, which became the largest bank failure since the 2008 global financial crisis in March. Now, a lot of this is brought on by a couple of different things. And the article will go into that here just really briefly. One of those is environmental social governance, or ESG, which is supposed to not only be something that businesses pay attention to, but eventually they wanted to replace our credit scores. The other thing, and this even ties into Hollywood, is DIE or DEI, diversity, equity, and inclusion. We're more worried about diversity than we are about doing good business. And that's the reason why a lot of these businesses, as we say, go woke, go broke. Because of things like ESG, because of things like diversity, inclusion, and equity. If you really want to make money in business, you have to go against the grain, go against the norm, and fight back against these things. Because what this leads to is the Fed digital currency. And if that happens, in my opinion, we're all screwed. So just thought I would put this one out there. Please comment down below if you have an opinion on what's going on with the banking industry, what's going on with the economy, what's going on with inflation. Comment down below. Please like, share, subscribe, hit the notification bell to get notified when my videos are uploaded on a daily basis. And I thank you for watching. I thank you for tuning in. And we will see you in the next one.